now tuned in to the Dervech Commercial Real Estate Podcast.
This is an opportunity you have at one of your centers. Right. It's excess land that's being underutilized, and you're looking to add value. In your opinion, right?
Yeah, well, it's kind of like when you look at it, you know, people are like,
Jeff Dervech with Dervech Real Estate here. I have Spencer Muratides, formerly with Redstone Commercial, now with Alliant Partners, owner, developer operating out throughout the southeastern United States. And we're here to chat about the current real estate market, talk development, talk commercial foresight, what we're seeing in the marketplaces. How are you doing this morning, Spencer?
Good. Thanks for having me, man.
Absolutely, my pleasure. So, Spencer, what do you expect moving forward for commercial real estate here, moving throughout the rest of 2018 and into 2019? You know, we're in some really good times right now. How long do you think these good times will last? What are you seeing on your side?
Yeah, it's pretty crazy right now. I think the retail space in particular, which is what I can speak to, where we spend most of our time, is evolving, and I think it's a little exaggerated, the risk of the death of retail and malls, etc. I think maybe that's where you can find some of your better risk-adjusted returns, actually, because people are running from them if you can repurpose, you know, some of those big boxes right.
Right.
But generally speaking, it's more service-oriented now. It's about it's things insulated to technology. So restaurants, haircuts, Orange Theory, gyms. You know, it's evolving what the modern shopping center looks like today, and it's kind of fun, you know, along for the ride, checking it out.
Yeah, it's definitely evolving tremendously. I mean, you're seeing a lot of these thriving commercial developments are including more and more of entertainment-driven uses. You know, as it relates to restaurants, bars, service-related uses, you know, massage service concepts. Nail concepts. I mean, that's kind of hard to replicate online, you know. And it's all about the entertainment in today's day and age. Do you feel pretty strong about where we're at right now in 2018? Where do you see things going for the rest of this year? Do you see it being good into 2019? I mean, we're 2019, so 2007, 2008. That's coming up on 10 years. So it's kind of crazy to think about that.
Yeah, you know, it's interesting. I just read this morning that the unemployment rate today is 4% is the lowest it's been since 2000. So, you know, in the news, everybody's, the fundamentals support it, you know, good times are ahead for longer, etc. But that's really the main reason why I'm so scared. It's like Buffett had a great quote in that you should be greedy when others are fearful, and fearful when others are greedy. And
that's great.
Regardless of, everyone says the fundamentals right now support it. Well, the fundamentals always support it until they don't, and no one ever sees it coming. So because of that, I'm a little nervous. You know, there's a lot of risk in the world. That you have the China trade stuff going on. Who knows how that shakes out? The stuff in Syria. It's a lot of macro level risk out there, and treasury rates are moving, which some people argue is, you know, a great sign for the economy and keeping inflation in check. But I don't know. It's crazy right now. It's way too hot. Something's got to cool off.
It's just unique. You know, we work on a lot of land deals and a lot of investment opportunities. You know, and what you're seeing is you're seeing a lot of stuff trade at above prices of where it sold for in 07, 08, which is kind of scary when you look at what it sold for in 08, and then it's selling for more than what it was during that period of time, which is kind of crazy. But, you know, on our side of the table, we feel that the markets are very strong right now. We feel good about what's going on. We feel good on the, you know, we feel confident in what the banks are doing too. You know, they're not just lending money, you know, free-nilly out there. I mean, they're very stringent upon who they're lending to. Some banks are very even cautious to lend on commercial real estate right now, unless it's owner-occupied stuff. But anything with good tenants, long-term tenants, and a good market is going to be able to be financed. And it's it's good right now. And like you said, I think it's going to take something kind of coming out of left field, in our opinions, that something with Korea or something. Overnight we hear about a bomb being dropped, and that's gonna be the thing that throws us into this whack, in our opinion. Everything else appears to be good. I mean, you had all these big centers with a bunch of debt coming due this period of time with the CMBS market and 18 and 19 and 20, and from
luckily rates are still low.
And our relationships are saying a lot of that stuff is was supposed to be coming up with some problems, and they're all getting worked out, which is a great sign.
Yeah.
So, do you feel as if the market, is kind of frothy right now?
Yeah, I mean, it really is. I'm not a residential expert, but Rosie and I, my wife, have been looking recently, just poking around at houses, and you see a house come up, and maybe we live in a bubble being in South Tampa, but it's like, man, in 3 days you got 10 offers, and some are all cash, and it's like, it's unbelievable. I'll give you an example. We just bid on a vacant bank on Florida Avenue in Tampa.
Yeah.
1980s building, tight little 0.6 acre site. We had the highest offer above the ask price, but we needed 90 days, really.
Sure.
60, a little money goes hard.
Which is reasonable, 90-day inspection period in the commercial acquisition. I mean,
you don't have, and you got to work your deal out with your tenant,
Mm-hmm.
Some guy comes in out of right field, offers full price, slightly below where we were, but full price offer, all cash, 30-day close. And they go to contract, and in their contract discussions, he whacks the refundable deposit from $25,000 to $20,000, which should have been like clear sign this guy's not real. It's refundable $5,000. Well, he gets under contract with the seller, and in return for taking a discount to his deposit, he says he's gonna lower his 30-day due diligence to 23 days. There's no way you get this done. Well, long and behold, he dropped it last week. The problem now is the seller has these unrealistic expectations that that's the market.
Sure.
So they only want another 30-day deal brought to them on the table. And here we are with our same tenant in tow, wanting to do the deal, and we're above the ask price, and we can't even get the deal done. So, and that's, maybe an outlier, but I tend to think that a lot of these sellers right now are just, it's a seller's market, and good for them. If he can get it, great, but it's hard to get something done, right now.
Yeah, and it's crazy about talking about those vacant bank branches. I mean, if you don't have another bank to go into that location, you look at what they paid for the property when they purchased it, and they have it on their books at this high dollar figure. And say it's a 7/10 of an acre site, maybe a full acre site. What do you put on that piece of dirt? Maybe it's a QSR. QSRs are $800,000 $1 million users. Some of the premium QSR fast casual concepts are maybe 1, 2, 1, 3, 1, 4, 1, 5, depending upon how much they want to be there. But you're not seeing them paying the same amount that the bank paid. So the bank's taking a haircut on these deals. So
you're right. We have 2 banks for sale right now. Ground lease deals, same thing, 3/4 acre, low cap rates.
Right.
And we're struggling with that right now. 15 years from now, what's that dirt worth? And can you make sense of it? Because they're going to pay a really high number right now for this site. So, yeah, it's to be determined how that.
And then And then if they go dark, who backfills that?
Yeah.
Because it's functional obsolescence. It's really built out specifically for a bank on a corner, customized. And then it's not a traditional retail building where you can just plug and play another 4,000 square foot user in there. It's built out with drive-through lanes and customized the way that the site's oriented and all that type of stuff.
Yeah, I mean, we're one site in particular right now, Delmay Brent Waters, we're in the process of selling. We have a problem with the Tampa code because they can make use of the building. They could tear the drive-through lanes down, but to backfill it with a restaurant, it doesn't park to the site.
Wow.
So maybe you could get a variance or you could buy a little additional land, but it's an unknown, negative look, on the property
This is a vacant bank.
It's an active bank.
An active bank, and you're looking at potentially redeveloping
We're selling it on the market as a coupon clipper.
Cool.
But some of these guys
triple net investment deal.
Yeah,
gotcha.
Some of these guys want to know what's the residual value, and yeah, that it's not that easy to just plug and play a restaurant.
Getting back to the market being frothy, at least on the land retail side, you look at what Wawa did coming into the market and buying the corners that they wanted to buy, specifically at these targeted intersections, and their land comps getting out into the marketplace. And then you got these unsophisticated owners that are down in Charlotte County, Polk County, Pasco, other areas, and they're hearing about these land sales, and they're thinking that their piece is a Wawa deal, when in reality it's not a Wawa deal, and Wawa was the highest payer for that. So they're stuck on this perception. We're 10 years into the current existing market. 4 years from now, if they don't make a move now on that piece, they might not ever get to that number again.
And what's sick is it's not even in those secondary, tertiary spots. I mean, you could be at Main and Tampa, and you got a Wawa deal, and the guy across the street now thinks his land's worth the Wawa price, and it's like, there's only one Wawa deal.
Right.
Like maybe someone else comes along, but it's frustrating. Yeah.
Sure. And this gets into our next thing that we had was, what are you seeing for cap rate trends? And going back to the Wawa side, I'm seeing a lot of Wawa deals staying on the market, not being able to be sold right now at 4.5 caps, 4.75, 5 caps, depending upon where they're at geographically located. In Southeast Florida, down in Miami, obviously they trade for more because it's a more desirable geographical area. But what are you seeing on that front?
I think it's a really interesting time. I think we're in a price discovery mode. We priced these two particular ground lease banks in December, and Treasury was at like 240. And in 60 days, not even, by February, it's at 286. So already from where we thought that we were going to be priced, it moved almost 50 bips. The Treasury did. Wow. Now, that's not directly correlated necessarily with cap rates, but they're for sure correlated. So what we found is, we price these things at a low cap rate. Interest rates are moving up. So the market's a little spooked, thinking, hey, let's ride this a little and let the price come down some more, thinking these cap rates will move with it. Mm-hmm. So what we're finding is we gotta, all the competitive stuff being brought out, other Chase 15-year bank deals, are all trying to price each other just a little bit higher, but at a really good cap rate. So we're at call it 4.25. So
how long has that been out on market for?
Less than 60 days.
Okay.
30 days.
4.25.
4.25. Someone's coming out at 4.3. Because they want to make sure their thing trades before our thing, because everyone knows rates are moving.
Right.
So then we're like, oh man, this isn't the same market. Do we go to 4.35?
Right.
So, and the sellers kind of see this happening too. So we're getting a lot of activity, but it's a question of where do you strike? Do you have to? Thankfully, we don't have to sell these assets. So if we don't get it, we don't get it. But we're really holding out for 1031 guys, because they can't think, right, wrong, or indifferent. It's not like kind. So a 1031 guy can't buy a Treasury. Sure. So we're hoping.
And what the good thing is about the bulk of where we do our business in the Southeast, specifically in Florida, on the cap rate side, we're an attractive buy for a lot of outside investors because of the tax situation here in Florida as it relates to income.
No income tax, all the people moving every day to the state. I mean, we
have the sunshine, right?
It's a place to bet long term.
It's crazy because the construction prices are going up. And if construction prices are going up and you're doing a new development deal, the land is the variable. So if the land's the variable and the construction prices are going up, and then you have you have a tenant that wants to be in a specific market in a specific location, and you say, okay, we can put you here. This is what the price is going to be, and then that price equates to X amount of dollars per year in rent. And then typically, a lot of these retailers base how much they can afford to paying rent by how much they're going to do a hypothetical sales projection that if they were to come in that market on that piece of dirt in that geographical location, that's what they would do in sales. And they're saying, oh, we can't pay that. Well, that's what it costs to be in the market. I mean, these are real costs. I mean, we can't, this is our business. We can't do this for free, So it's an interesting time for sure. So let's talk. Your group you work for is an operator for a few retail concepts, Dunkin' Donuts. You guys just are rolling out Taco Bus on an expansion. Yeah. Tell us a little bit about these concepts, And then how are you approaching the real estate for these brands? What's your strategy here for the next 12 months, kind of long term? What are the brands that you guys are working with right now?
Yeah, we're exactly right. Dunkin' Donuts, Taco Bus. We have a car wash concept, Limited Express. It seems like it's a pretty hot thing right now. You stay in your car and go through the tunnel, and then there's these free self-service vacuum stations. So a little different from historical car washes.
Like different than like a Mr. Car Wash.
Right,
it's more
hands-on, more labor. We're less of that.
Sure.
And we're looking to add 2 to 3 more concepts maybe. The family was in the gas business, the Capitano family and Radiant, and they were operating food and beverage subways through their gas stations. So they had built this great kind of experience and team to manage those.
Sure.
They've since gotten out of the subways, but they've added these few brands and added some more. So we're trying to identify sites, bring those tenants to deals, add other tenants, try to do little multi-tenant buildings.
So you guys are a franchisee of Dunkin' Donuts.
Yeah.
So, and you operate the Dunkin' Donuts. So you're franchisee operator. Taco Bus, same thing. You're operator. You guys have partnership on the brand, and you operate them as well. And then this car wash concept, will that be is that a franchise model, or is that
It's a similar kind of deal. It's self-branded. It's going to be Radiant Car Wash, but most of these car washes all buy the equipment from the same handful of guys.
Gotcha.
But
it's crazy. The car wash business, I didn't realize that they're a good user for a lot of these retail sites. I didn't realize that they're being really aggressive. I didn't realize it's a profitable business, really.
Yeah,
I mean, obviously,
it's amazing what some guys are paying for land. I mean, I've seen sites trading now in like the low millions, $1.2 million, $1.3 million for
a car wash site,
which is just crazy.
What's their acreage, approximately?
An acre
of dirt.
Yeah.
And do they go underground on those, underground stormwater retention, or do they try and do?
You try not to.
Try not to. That's cost.
Your cost. But you'd like to be. I mean, a car wash all day can support $600,000-$700,000 for a good site.
For a good site.
It's hard to find an acre less than $1 million. That's a good site.
What do they want to be in? Do they want to be in like the retail node, like an out parcel to like a Walmart, out parcel to a big box?
Yeah, where they don't want to be purely destination driven. So you want something that drives traffic, ideally on the weekends too. So I like following Lowe's, Home Depot. Wawa is great to be next to Wawa. They don't have that restricted in most places.
And they don't have car washes.
No,
wow, that's something I never
so you got
really
all these
thought
cars
about.
coming and going. We're at retail nodes,
sure.
More or less.
Cool. And then on that front, like, are you guys, the approach to the real estate for like the Dunkin' brand, you guys are looking to either redevelop current sites that you guys own in your portfolio and do a Dunkin' branch, or you guys are looking to acquire land to build a Dunkin' unit?
Yeah.
And ideally, I mean, you want to own the real estate. I mean, that's the whole plan.
Yeah, absolutely. Goal number 1 is to own the land and bring our tenants. Where we can own the land, we will bring the tenant to a site. We just did signed a lease for Taco Bus at Gandy, Manhattan.
Nice.
Where
the Brightworks deal?
Yeah, Brightworks deal. We don't own the land. We're not in the deal from an ownership standpoint, but we're the tenant.
Sure.
So wherever we can be involved in a good site, whether it's ownership or not, we're happy to take a look at it.
Cool.
Around that or doing in sales.
Kind of live and breathe the market. Early in the morning, late at night, see who's in there, traffic flow, traffic patterns. Yeah. I mean, I knew I was at the Tampa ICSC West Florida Idea Exchange over here in February, and during the lunch portion of the event, they had a panel discussion, retailers runaway, and you had the group from Chichio's.
Yeah.
And with the fresh kitchen concept that they have, they've been very selective on where they're doing deals and really wanting to be in certain areas and willing to wait to get there, not necessarily rushing to do the deal. But it was funny because they were mentioning they actually go down to the market. They'll spend 3 or 4 days. He was saying they'll go work out at the gyms and stuff. They'll kind of just go and live and breathe in the market for a week.
It was pretty witty.
Yeah, it's kind of cool.
Go to the local gyms and see what the clientele's like.
Yeah.
Yeah.
So everyone's got their own thing. I know, the gas station users, they want to go there and do a traffic count in the morning. They want to go do a traffic count in the evening. They want to know the traffic flow. I mean, you have you got to understand your target customer, and then who they are, and understand everything you can about them, so that when you do a new site, it aligns with who your clientele base is, and that kind of can help you make a decision as if it's going to be a successful net new store for you. So I think it's really cool. But when you relate to the Site Zeus model, it's a very, very powerful tool. But I agree. I think it shouldn't be the only thing that you use, right? If you say, look at your stores and projected sales and stuff, and they tell you to put a store at Kennedy and Dow Mabry. Well, you and I, we know this area. You know how hard it is to get to Kennedy and Dow Mabry, so you have to have the real estate relationships. You got to. They're not sellers. You got to have the relationships. You got to understand the market, and there's a lot of intangible things that the technology necessarily can't always tell you, relating to municipal codes, relating to zoning, what properties, a lot of the zoning stuff. Yeah. So there are signage. So going back to the code, signage, access. These are all things that
roadway improvements, utilities,
5-year plan with FDOT. This type of stuff. So it's really cool. What are you seeing in today's market as a tenant? Is it a landlord or tenant market, and then how has that played to your advantage or disadvantage?
Yeah, it's a landlord market. I mean, it's tight to get a good site. You look at the vacancies and in Tampa in particular, because we're here. I mean, it's getting tough. Rents are moving up, and landlords can have their pick of the litter. There's a lot of restaurants chasing very few spaces and corners, and it's a seller's market.
Sure. Have you ever approached if there's an area that you want to be, maybe you can't buy it and build it, but there's like a specific sub-market that you want to be in, you love that center. Have you reached out to the center and be like, the owner, and hey, we want to be here, keep us on your list, let us know when you have something coming up, because we'll do a deal with you?
Yeah, more times than not. I mean, throughout the week I come across that a lot, and a lot of sellers right now, a lot of people have been saying, hey, I wouldn't know what to do with the money. You could buy it, but then it's a headache that I'd have to deal with. So most recently, the last 2 sites I've worked on, the sellers want to stay in the deal. They're not real estate guys. They want to put their land in the deal. They want to be a partner, and not that we're opposed to that. We have a lot of joint venture partners, but Sure. It's just, it's work to make a sense of that to work and have everybody's interests aligned.
Sure.
So yeah, it's hard. It's hard right now to get it to work.
Yep, I can totally understand and relate to that point. I'm going to go back. We talked, and you were telling me about this cool project that you worked on in your past life. It was a Publix development center, shopping center development. Can you walk us through kind of that experience from when you were approaching the site, when you were looking at the land, when you're talking through and negotiating the deal with the property owner, getting it through corporate, working and coordinating with the tenant, getting it through the inspection period, any issues that might have occurred, and then finally through the rezoning period to ultimately closing on the property. I mean, as you and I both know, that process can take every bit of...
Took us over 2 years.
8 months, a year, 24 months. I was in Baltimore working on deals that we were 24-month option contracts that we would close upon governmental approval. So could you kind of just tell us about that deal, because it's an interesting one.
Yeah, absolutely. It's a slow game. You got to really have patience and just not bang away at it every single day. That goes back it may be over 24 months from now ago. It maybe took about 2.5 years, and we were lucky that it was then, not now, because it's so hard getting time, explaining to a seller that you need time to take down 13 commercial acres and have it make sense, Mm-hmm. So that particular project, thankfully too, we were in a kind of a tertiary market, so there wasn't as many people, running the price up for us. And we met with the landowner and just were very honest, said, hey, this is what we want to do, and this is the time it's going to take, and thankfully he was willing to play ball with us.
But when you do approach a property owner, I mean, going back to your track record of what you've done with the tenant that you were working with, that you had in tow, and kind of showing them who you guys are. I mean, that it's a lot of it's a partnership, because ultimately it's a piece of vacant dirt, right? Yeah. And in order for them to get out of that dirt, they need to sell it to a developer.
Yeah.
They need to either develop it themselves, but no one wants to take on a $30 million obligation to get through that whole process, or partner with a developer by selling it to them and allowing them to go through the process to ultimately cash out of the land, because the land's most valuable once it's entitled and zoned and ready for development.
Yeah, absolutely. I was really lucky in that the brand and the people that I was with at the last company, I didn't have that relationship. I wouldn't have been able to do that. So I was happy to be a part of it and to see how they do it. But exactly right. I mean, it's a long-standing company and brand over 3 decades.
A lot of track record.
A lot of track record, and they were able, some guys joke, you need gray hair to really do deals, right? You got to have a guy on your team with the gray hair, because that's the experience.
Yeah.
And
so maybe I'm not there yet. Maybe we should dye it.
Start coloring it up. But that was it. And I was just lucky to be along some really good people who have done that before.
Sure.
So they, that's how we were able to get in the door, though. Exactly right. It's like, look, we're real. We've done these deals in the past. This is how long it takes. We're going to be transparent in the process and tell you exactly where we're at. Mm-hmm. And so we got under contract. We had to rezone a piece, which was a really interesting experience. It was a single family home.
What was the initial purchase price, just ballpark? You can remember?
$1.8 million, and then the residential piece. It was right in the low twos.
For about 10 acres?
Yeah, 13, 14 acres up in Tennessee.
Okay.
The rezoning process was really interesting, because here we are trying to develop this center in front of a neighborhood, more or less.
Sure.
And it's going to be more traffic down their side streets.
And no one wants change.
Nobody wants, not in my backyard.
Yeah, exactly.
They want the pub, they'll go to the Walmart, but they don't want it built near them.
Yeah, yeah.
So we had to get this piece rezoned, and it was a really interesting experience, having to embed yourself in the local community to, one, show that you're sincere, but then meet the players, and not just the players, I mean everybody, and hear all the concerns and try to create something that is valued in their community, because at the end of the day, they're the ones that are going to make it work or not work. So you want to design something that is the right fit. Mm-hmm. So we went through this rezoning process, and
that's so important that you do that as a developer, because if you don't go meet with the local associations and the local boards, they're going to show up at your rezoning with picket sticks. You know what I mean? They're coming out of the woodwork.
They came out.
You have to approach that first. You have to get and work with them, because ultimately you are coming into their communities, and ultimately you have to work with them if you want to have a successful project for the community. I mean, because ultimately your tenant that wants to be on that site is going to that site because of the people that are in that area. Yep. And it always has to be a win-win-win. So I respect that you went and you met with all those associations, because it's the only way to get the deal done. Because if you just show up with an application and you slap a site plan on the table and you say, this is what we're going to do, you're extending out your time, because you're going to ultimately have to go back to those associations anyways and go have conversations with the presidents or whatever, and do your president. So it's best to hit that obstacle face head on, first thing first.
Yeah, absolutely. In this particular case, there was a restrictive covenant on the land, and there were 6 or 7 reps in the neighborhood who had to all sign an agreement to make modifications to it.
What type of a covenant?
Delivery hours.
Okay.
Alcohol sales.
Okay.
A handful of things like that, design standards,
sure.
And little things like, we don't want to have a nightclub there, but if you have a restaurant that sells beer and wine, then you're breaking how the code was read at the time. So we had to go host meetings in the middle of the neighborhood and after work, and everybody comes out, and some are not as informed as others as to where we're at with the process, who we are, what we're doing, etc. And no matter what you do, there's always going to be people that aren't supportive, no matter what.
Sure.
It seems. I mean, some people
There always is.
ugly.
Absolutely.
And, we wanted to stay as calm and receptive and take the feedback to design something, like we said, it was
We take it personal.
But there's a lot of emotion involved, And
Sure.
It's a game within a game, for a lack of a better word. I mean, it's not a game, to be marginalized in any way, but there's a whole craft to the entitlement process, and
having the right consultants is huge. Having the right land use attorneys that understand the local municipal codes.
Yeah.
Having the right engineers that are able to pivot and able to kind of to move quickly to make adjustments.
Absolutely.
Is huge. It's team, like you said. It's all about having a good team, and
absolutely
that's ultimately the best way to be successful. So as we conclude this, I mean, what are you? We're just starting the second quarter to 18. We're getting into we're going towards the middle of the year. We got ICSC Las Vegas Recon. Will you be going out to Recon this year?
Yeah.
With Alliant? I'm going. Yeah, we'll be out there.
Awesome.
Going out Saturday through Wednesday. We're doing a bunch of the educational stuff on Sunday. We're gonna go get Gary Rappaport is speaking. He's giving an educational lecture on investing in retail properties and how to structure retail partnerships. So
cool.
I've read his book. He's a great person to listen to, and he's willing to share his insight, which is invaluable. It's all about paying it forward, man. In our business, and So what are you most excited for as you kind of keep going into 2018?
Just deal flow. Just having fun with people that you want to work with. Like, life's too short to just do deal and be miserable.
Right. Yeah.
So it's really just about waking up every day and trying to have fun and just be better than you were yesterday. And if you can do that, who knows where we're headed, but I think we'll end up somewhere that will be pleasant.
Absolutely. I mean, this business is all about building reputation, having integrity, and we love what we do. I mean, when you can wake up and say you love what you do, that's pretty cool.
Yeah, absolutely.
And really, this is a relationship business. You build relationships, and it's so crazy how you meet someone and the deal might not work out, but you continue to build that relationship, and they say, hey Jeff, sorry we couldn't come to terms on that deal, but hey, I got 10 other properties. You want to take a look at that? What do you think? And I mean, It's just it's a big world, but a small world, and so we're excited. So thank you so much, Spencer.
Yeah,
enjoyed catching up and chatting, and this was a fun time, man.
Thanks, man.